Hello everyone, this is Jack speaking. Today I'll be talking about technical and fundamental analysis, and somewhere in this video, two of you who have subscribed to my channel are going to get £100 each, and there is something wrong with my ear. What? The giveaways are currently being paid only in BCPT or Block Mason Credit Protocol in order to populate the asset and increase its value. In case you want to join us on this, it is the channel trailer video which you need to watch in order to find more details. Watch it and decide for yourself if you want to join us and make some good profits with it or not. We haven't broken new high in price for a while now, but I can definitely not complain about the price drop. Whoever started panic selling helped me buy another more than 300,000 units super cheap. If the price keeps falling even more, I might beat the most units I ever had, because the lower it gets, the more units I'm able to buy. Okay, let's get to it. So when I first started trading, I started learning as much as possible about different methods which helps improve profits. Most of them was based on technical and fundamental analysis. To begin with, let me tell you a little bit about both of them. In finance, technical analysis is an analysis methodology for forecasting the direction of prices through the study of past market data, primarily price and volume. Behavioral economics and quantitative analysis use many of the same tools as technical analysis, which, being an aspect of active management, stands in contradiction to much of modern portfolio theory. The efficacy of both technical and fundamental analysis is being disputed by the efficient market hypothesis, which states that stock market prices are essentially unpredictable. And research on whether technical analysis offers any benefits has produced mixed results. As such, it has been described by many academics as pseudoscience. I'm supposed to give you 100, but I will give you a fiver, okay? Okay, you get £100. I'm not going to get into much more details about these analyses, but there is people who do this professionally as analysts for big companies. They supposedly manage to predict partially the future of any given instrument, but to me personally, this is not good enough. Let's say I use 3 indicators combined, which allows me to make 51% profitable trades. So the remaining 1% of the equation is going to be my actual gains minus trading fees. As you can imagine, this is not much of a profit, or at least to me it's not much. Think about this for a second. Let's say that Bollinger Bands shows you that you have to buy Bitcoin once it crosses $60,000, for example. I'm not going to explain about Bollinger Bands because I don't want to fill your heads with nonsense which somebody classified as useful. Anyway, you buy the asset after the indicator gave you a signal, and next thing you know, Elon Musk needs some spare funds to build a spaceship or a rocket or whatever, and he drops a huge amount of Bitcoin to get the funds he needs. How useful exactly do you believe it was the use of Bollinger Bands in this particular case? I will tell you, absolutely useless. And this is just one of many possible scenarios. I have tested quite a lot of indicators, both on their own or combined with other indicators, as some complete waste of time trading book recommended or a seminar which I attended. Well, I have not actually made any statistics of my own, so I don't know if I got 51% of the trades, but I know on 100% that I didn't, because back then I didn't even profit from the markets. And this is a ton of time spent learning about different indicators, each more useless than the previous one. Honestly, I don't know how many years spent studying such, or what would it take to actually make the indicators work for you and make you money, like the professional analysts do for the companies. On the other hand, we have the fundamental analysis. I didn't spend much time studying it because at the time I was quite fed up with studying technical analysis, which turned out to be an utter waste of time. It took me quite a long time to actually come up with a strategy of my own, which I haven't read or learned about anywhere. My strategy doesn't care in which direction the market goes because it benefits me either way. Of course, when a certain market goes down, my portfolio shrinks for the time being, but in the long run it works quite well, at least for me. How about we stop being so selfish and go and help somebody who needs it the most? Okay, so he knows that he's gonna get something, he just doesn't know what is he gonna get yet. And what you get is... Happy? I hope you are. Please pause the video and hit the like button, as it helps me tremendously to build this channel. Also, if you don't have a portfolio but you want to start building such, or you do have a portfolio but you're not happy with your current broker, have a look down in the description. The exchanges you see there are trustworthy and they charge fair fees. Depending on which one of them you decide to go with, they might even give you a welcome bonus. Or you can go with all of them, as I always advise traders and investors to use at least a few exchanges for an extra layer of safety. So, the strategy I managed to come up with after many years doesn't care in which direction the market goes, because it acquires either one of the assets or the other being traded. Let's say the trading pair being traded is BCPT BTC. If the price goes down, the waiting buy orders are going to acquire more BCPT, while on the other hand, if the price goes up, it's going to sell certain orders, which means I'm going to acquire BTC instead. Of course, when the price goes down, the portfolio shrinks, and when it goes up, it grows, but the important here is the long-term gains. Nobody knows where the price of any given asset is going to be even one day from now, not to mention a year or a decade. With this being said, I couldn't come up with a better, safer strategy over time. True, your portfolio can shrink a lot, but it will continue generating income no matter what. I have the strange feeling that you're forgetting something. It's the last 100 pounds, isn't it? And this one is no surprise because I already told him. The last 100 pounds goes to Louis, and this picture is his choice, so don't blame me on that. Other than that, his account is this one. Thank you all for watching this video. Don't forget to subscribe if you want to have a chance to catch a giveaway yourself, and I'll see you next time. Whoever started panic selling, help me buy another more than 300. Whoever started panic selling, help me, God, please. If the price keeps falling, I might be the most units I ever had, because the lower it gets, the more units it allows me to buy. Yeah? You think it's easy? Okay, let's get to it. So when I started trading, and I forget the lines, I'll remember them eventually. In finance, technical analysis is an analysis methodology. In finance, technical analysis is an analysis methodology. In finance, technical analysis is an analysis methodology for forecasting weather. For weather forecasting, the weather in London tomorrow. In finance, technical analysis is an analysis methodology for forecasting the direction of prices through, I don't know the rest. Behavioral economics and quantitative analysis use many of the same tools as technical analysis, which, being an aspect of active management, stands in contradiction to much of modern portfolio theory. I have tested quite a lot of indicators, both on their own or combined with other indicators, as some complete waste of time trading book recommended, or I'm tired, mate. I'm fucking tired. Also, if you don't have a portfolio but you want to start building such, or you do have a portfolio but you're not happy with your current broker, have a look down in the description. The exchanges you see there are trustworthy and screw this up, didn't I?